I think you got to kind of guess which way you think things are going to go. And then you got to make sure that you maximize your return, because key problem that I have is that it's very expensive to short right now. SH. What if we looked at SH again? What if we just went net short on the SPY once again? That actually feels right. I like that. Go out the next Friday on maybe even the 21st on SH and look for a net short here. Momentum is positive. That's the one thing that I will say, but it is continuing to erode. It's all being driven by energy. And at some point that breaks. We've seen it break this year. That's here. That's this June period. This is what I feel like we're about going to experience. A little run, and then you got this chop that just transpired. It just happened for 5, 6, 7 days, and then it just went. So this started on May 27th, 31st, 1st. That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. 1, 2, 3 days. So it would be the 21st. I'm going to go net short for a return to the lows of the year on the SPY. And I'm going to target the October 21st date. And I'm going to do it with wow, that's crazy. Okay, so this is kind of a no-brainer. All right, option profit calculator. I'm stunned that there's actually a bid on what I'm about to show you. All right, call spread, SH. Remember, I'm bearish, so I'm gonna go net short now because there's a lot of negative events coming up. I'm going back into SH. So the spread on the 16 for the 21st is 55 and 60. 55 and 65. The last sale was at about 65 cents. Okay. So this is important because here you have a bid ask in this relatively wide spread. And this is important because keep in mind, on the SH, a 1% move is 16 cents. So you're talking about a bid ask spread that has almost 0.6, 0.7% that you'd be giving up if you pay too much for it. So you want to pay 55 for this, but you're not going to get it. So if you were able to put in a bid for 60, and there's no bid for 60 right now, but if you can get the bid for 60 and then you write the 18, and right now the 18, the bid on the 18 for the 21st, the last trade was for 9 cents. If you can get anywhere close to that, I would imagine that most people are going to be in 5-cent increments. But even if you can get the 60 and sell the 18 for 5 cents, you're back at the 55 point. And you got a probability of profit of 44%. Your break even is at 1650. And then your max return is huge because I'm not worried. If it goes to 1805, I mean, you're talking about a complete market meltdown at that point. But again, we're going net short into the 21st. That's a pretty clean trade. And again, I'm effectively wagering on a sell-off tomorrow. Next week, ugly week, possibility, SPY. Nope, SH. Let me get this one in here. Pro shares short S&P 500. Can't forget the year. $18 call for. All right. You're right, Jeff. That's the right way to be. I mean, again, the momentum movement today, the positive momentum movement that we're seeing right now is driven entirely by energy. So energy can do that. Energy stocks can do that. And that's why I continue to say, like, I've seen this transpire already before. I've seen this choppiness before. And it may be a week. We may sit in an environment for a week. This is why I keep going back. You got to look at previous types of events in this market to really get a better sense of just how this can behave. And again, if the SPY back to this period, I mean, it feels dead on similar. We had a lot of comparisons this year, and it's important to remember events, especially negative momentum events when they transpire. There's been a lot of them this year. A lot of capital just pouring out of the market all at the same time. And in August, the similarity here that I was referring back to was here in April. The sell-off, the negative momentum sell-off here was similar to what happened in January. So what I'm looking at right here is, like, history doesn't repeat, but it rhymes. And with the events that are transpiring in the next week, remember, this June period, there was a jobs report here. You had choppiness. You had this range-bound scenario, right? 407 to 417. And then it just gave. And all of this was driven by energy. Very short-term period of positive momentum, positive capital coming into the market, positive ETF flows coming into the market. And we've seen this in the first 4 days of the year because money is being allocated to start the year. And a lot of money is being allocated to the energy sector and the materials sector right now. But it may not last. And again, what I am very worried about is you could see this chop that transpired here. You had this little bit of this rally from 390 up to 420. But look at the XLE during the period. This was a very protracted, energy-driven rally. And then all of a sudden, after we had a big move higher on oil prices and big move higher, concerns around what OPEC is doing and what's happening with China and what Russia is doing, all of a sudden it was just, screw it, let's take the profits, and this just bottomed. So I see a move like this. I see a move like this. I see a move like this. 5, 6, 7, 8 days in a row of positive gains for the XLE. You watch some of these energy companies just continuing to rally. XOM, that's a breakneck move off of those lows. You're getting into overbought territory. And you get into overbought on Exxon, you can see what has happened. A couple times, yeah, it'll rally. That was the war. But here was the March sell-off. Here is the June sell-off. It sold off here when it got into elevated position on the RSI. It sold off here again. MFI was extraordinarily high. Don't be shocked to see, maybe it hits 105, and then people just say, you know what, we're taking our money. And when there's big outflows on some of these big energy companies, it's not sustainable. And it just gives. Careful.